ever looked at a headline, maybe scrolling through your feed, and thought, hang on, there has to be more to this story?
Today, we're doing a deep dive into China's economy, specifically the first half of 2025. And, well, on the surface, it's a real study in contradictions. You see the common headlines, right? Yeah. Subdued consumer confidence, a stressed property market, record high household savings. But what our sources are showing us is something, well, quite different. A counter-narrative that's much more nuanced, dynamic even. We're talking surprising resilience, really targeted innovation, and this profound shift towards strategic, high-value spending. So that's our mission today. Unpack this great paradox, explore these fascinating shifts, and uncover what a lot of people are calling the next consumer wave.
Okay, let's get into it, because what you think you know about China's economy, it might be quite different from the reality that's actually accelerating.
You've really nailed that central tension. Looking at the macro picture, that wall of caution you mentioned, it's absolutely the consumer confidence index, the CCI, it is hovering near historic lows. And that's mainly driven by ongoing concerns about jobs, economic stability in general, and yeah, of course, the real estate downturn. That's still a big factor. We're still seeing new home sales below pre-pandemic levels.
Yeah.
That definitely puts a damper on morale, understandably.
Right.
And this caution, it feeds directly into this massive surge in household savings. The personal savings rate has been consistently above 30% since 2020.
30%, wow.
Yeah. And get this, in the first half of 2025, total household deposits hit an incredible 163 trillion renminbi.
What?
With net new deposits just in those 6 months hitting 17.94 trillion renminbi.
That's huge compared to previous years, isn't it?
Exactly. A significant jump from 11.46 trillion in H1 2024 and just 6.53 trillion back in H1 2023. But what's really fascinating here, and I think this is often missed, is that this isn't just, economic paralysis. It's not people just freezing. It seems to be a very deliberate, strategic reallocation of capital.
Reallocation? How so?
Well, households are actively moving money away from risk, particularly the volatile property market, and trying to secure their financial futures in other ways. So this huge wall of savings, it's not a dead end. It actually represents this massive untapped pool of future demand.
Okay. So it's like potential energy waiting.
Precisely. It suggests a temporary calculated pause, a hesitation, rather than a fundamental lack of cash to spend.
Okay, that makes sense. That massive wall of savings is definitely there. But then how do we explain these incredible pockets of spending that seem almost defiant? How do you square that circle? Is it just, caution here means stagnation everywhere else?
Yeah.
Or is something more complex happening in how people decide where to put their money?
Yeah, it's definitely not zero sum. And that's really the heart of the paradox, isn't it? What we're seeing is a really sophisticated, almost surgical approach to spending by consumers. Yeah, they haven't checked. They're just incredibly discerning now. They've shifted away from maybe broad, sometimes aspirational buying towards very selective, value-driven purchases. The money hasn't vanished. It's just being redirected. Channeled into categories that offer, say, tangible improvements to daily life or perceived long-term value or enhanced well-being.
So prioritizing, not stopping.
Exactly. It's prioritization, not cessation. And this strategic reallocation of savings, it's not just about avoiding risk. It's also about getting ready for future opportunities, maybe education, healthcare, or eventually bigger purchases when confidence fully returns. That stored capital is like a spring ready to uncoil, but, only when the right triggers appear.
So where is this carefully considered spending going? It's like you said, they've got this new consumption playbook highlighting pages on health, efficiency, long-term value. Let's maybe flip through some of those active chapters. Where's the money flowing?
Yeah.
You mentioned overall retail sales grew 5% year-on-year in H1 2025, which actually beat expectations. But the devil's in the details, right?
Yeah.
Food, for instance, led the pack. A huge 12.3% increase.
Wow.
And it wasn't just buying more food, but a real shift in how and what. New channels like snack specialty stores, think Hot Max, and discount retailers like Sam's Club, Aldi, they're booming. Plus a really pronounced move towards healthier options, sugar-free teas, things like that. Quality and convenience seem key.
So even with caution, people still want affordable treats and healthier choices? Makes sense. Quality of life stuff.
Totally. Small joys, maybe. It tells us that while big-ticket items might be on hold for some, these quality of life improvements are definitely in. And then look at home appliances, up a massive 30.7%.
30%, that's huge.
Right. That doesn't just happen. It really points to a focus on improving the home, maybe energy efficiency, prioritizing long-term value, personal comfort. especially when there's uncertainty outside.
Kind of a nesting instinct, perhaps.
Could be. And auto sales also picked up, rising 11.2%, heavily influenced, obviously, by the EV boom. We also saw strong double-digit growth in consumer health, sports, outdoor categories, people investing in themselves. Now, contrast that with, say, cosmetics up only 2.9%, or clothing just 3.1%.
Much more modest.
Exactly. It makes it abundantly clear just how selective, how deliberate this spending pattern has become.
Precisely. And this selective growth, it isn't really contradictory when you look closer. It's evidence of a market that's evolving significantly. If you connect it to the bigger picture, it just highlights a more sophisticated consumer base.
Right.
And they're demanding that brands adopt these really nuanced, category-specific strategies. It's not a rising tide lifting all boats anymore. Only those brands that truly resonate with these shifting priorities, well-being, long-term value, practical improvements, they're the ones seeing the real investment from consumers.
An evolution, definitely. But are there casualties in this shift? Are some traditional industries or categories really struggling because consumers have just moved on, not just paused their spending there?
Oh, absolutely. You see the impact in categories that maybe relied heavily on impulse buys or status signaling without much underlying value, or simply brands that haven't adapted.
Like discretionary luxury.
Some parts of it, yeah, if the value proposition isn't strong. Also segments in fashion or beauty that are more trend-driven than focused on, say, timeless utility or proven effectiveness. Consumers are cutting through the noise, asking, does this actually improve my life, my health, my future? If the answer isn't a clear yes, that money stays saved or goes to that EV or healthier food.
So yeah, harsh reality check for some sectors while others boom.
Definitely.
And nothing symbolizes this whole structural transformation more dramatically than China's auto revolution. This is not just a domestic story anymore. It's a global reordering of the entire car industry, and it's happening incredibly fast.
The speed is breathtaking.
China officially overtook Japan and Germany in 2023. World's largest car exporter. Then in 2024, exports hit nearly 5.5 million cars. That's an 8-fold increase from 2019.
8-fold.
Yeah. But look, it's not just volume. The average price per car doubled from about 47,000 renminbi in 2019 to 111,000 in 2024.
That's a key indicator.
It really shows this isn't just low-cost manufacturing anymore. This is high-tech, high-value innovation taking center stage globally, and EVs are driving it. Nearly half of all passenger vehicle exports in the first half of 2025 were electric.
Amazing share.
Domestically, Chinese automakers now hold 58% of their own passenger car market. That's up from just 33% in 2019. And for EVs specifically, they control almost 90%. 90.
A dominance, sheer dominance.
We're talking giants like BYD. They blew past Tesla in 2024, more units sold, more revenue globally. And then you have Xiaomi, the tech company, right? Their first car, the SU7 Ultra, sold 15,000 units in the first 24 hours.
Incredible launch.
And then they took it to Germany's Nürburgring and broke a speed record. I mean, the sheer audacity.
It is audacious, and the implications are just profound. This is really a strategic victory. China has effectively managed to leapfrog the whole internal combustion engine era. That they've established this commanding global lead in the transport tech of the future.
Leapfrogged, yeah. Good term.
And this isn't just about market share changing hands. It fundamentally redefines who holds the technological high ground in a critical global industry. It forces basically a complete rethink for every legacy automaker on the planet. Supply chains, manufacturing, R&D, everything.
Huge pressure on them.
Immense pressure to adapt or, frankly, risk becoming obsolete.
It's a seismic shift, reshaping a 100-year-old industry. So, okay, for you listening, you might see headlines about a tough global auto market. What specifically should you watch for as this Chinese dominance continues to unfold? Where are the fault lines and the new opportunities?
Well, first, watch how the traditional giants in Europe, North America, Japan, Korea respond. Their whole way of doing business is under threat. We'll likely see more strategic partnerships, maybe some consolidation, definitely more aggressive EV transition plans, and potentially, more trade friction as countries try to protect their own industries.
Right. Protectionism.
It's a possibility. For consumers, though, it probably means faster innovation and more competitive EV pricing, which is good. And for investors, it signals this long-term shift. Value is moving towards companies that are agile, tech-focused, integrated across that whole EV ecosystem, batteries, software, the works.
So a total recalibration.
A complete recalibration of the global auto landscape.
Yes. Speaking of global reach and surprising shifts, here's another trend that might catch you off guard a bit. We hear a lot about outbound travel from China recovering, but inbound tourism to China, it's seeing absolutely astonishing growth. Unprecedented, really.
That is interesting. Less reported on.
Yeah. In the first half of 2025, inbound international air passenger traffic was 22% higher than 2019 levels.
Higher than pre-pandemic.
Right.
Wow.
And Q1 2025 saw over 35 million inbound visitors. That's the highest quarterly total ever recorded. Now, this isn't just pent-up demand. It seems to be a direct result of strategic government policy.
Policy lovers.
Exactly. Easing entry rules, expanding visa-free transit up to 240 hours now for travelers from 55 countries. It's a really clear example of how these sort of soft policy changes can have a huge, almost immediate economic and cultural impact.
Makes sense. Reducing friction.
And what's also interesting is a shift in where people are going. Travelers are increasingly heading inland to Western destinations like Chengdu, Xi'an, looking for deep cultural immersion, not just the usual big coastal cities.
That shift suggests a new kind of traveler emerging, doesn't it? Less focused on, say, the traditional business trip or quick sightseeing, and much more interested in that deep cultural dive, heritage, local life.
Yeah, exactly.
And it's actually a really positive signal for maybe a more nuanced global understanding of China. And it connects to what we're seeing with China's growing cultural exports, too.
The soft power angle.
Precisely. What's fascinating here is how effectively this can bridge cultural divides, build goodwill beyond just the tourist dollars. When people experience a culture firsthand, directly, it can subtly shift perceptions, create connections that are maybe more resilient than just economic ties.
More than just revenue, then.
Much more. It's about projecting a different image, fostering international dialogue on a personal level.
And these big shifts in consumer behavior, global engagement, they're not happening in a vacuum, right? They're underpinned by some serious structural changes, especially in capital markets. Look at fundraising on the Hong Kong Stock Exchange, the HKEX.
Okay.
It jumped from just HKD 13 billion in the first half of 2024 to HKD 107.1 billion the first half of 2025.
That's a huge leap. What's driving that?
It looks like a clear sign that investors are seeing past the current headlines, feeling confident about the long-term prospects for Chinese consumption and innovation. And guess who's leading the charge? Consumer companies.
Makes sense, given the spending shifts.
Yeah, 4 of the 10 largest IPOs on the HKEX in H1 2025 were consumer-related firms. This points to the rise of this new generation of brands, many homegrown, with serious global ambitions. Think about Mixu, the tea and ice cream chain.
Oh yeah, they're everywhere.
Now the world's largest food and beverage chain by store count, over 46,000 locations, nearly 5,000 of those overseas. They had the 5th largest HKEX IPO. And Gumming, another big tea shop chain, was the 8th largest IPO.
These are often asset-light franchise models, right? Scaled incredibly fast.
Exactly. Built for massive scale, and now they're ready for the global stage.
And what's really fascinating here, tying back to that soft power idea, is it's not just about physical goods or services anymore. China is now successfully exporting globally resonant intellectual property, cultural products that are really capturing imaginations worldwide.
Like video games.
Exactly. Take Black Myth, Wukong. Based on classic Chinese mythology, uses real tourist landmarks in its design. It became a massive global cultural phenomenon. 30% of its players were international.
30%.
Yeah. Since it launched in August 2024, it's sold over 28 million copies, generated 9 billion renminbi, highest grossing buy-to-play game in Chinese history. At its peak, 3 million people playing concurrently on Steam. That's the second highest ever for any game.
Staggering numbers.
And the impact went beyond gaming. Tourism to Shaanxi province, featured in the game, reportedly tripled.
Wow.
This isn't just entertainment. It subtly shifts how people see China, When a game becomes a global hit like that, it naturally opens doors for more cultural exchange, maybe even influences perceptions in ways politics can't. What do you think that means for China's global image?
That's a profound thought. It means culture. Yeah, in its most accessible forms, games, stories becomes a kind of ambassador. It sparks curiosity, builds common ground, creates shared experiences that cross borders way easier than, traditional diplomacy sometimes. It's a subtle but potentially powerful way to reshape global narratives. One game, one character at a time. And speaking of characters, this cultural export wave isn't just digital, is it? We're seeing it in physical products, too, like that Pop Mart Labubu character phenomenon.
Exactly. Pop Mart's Labubu just exploded globally. It got initial traction from a K-pop star on social media, then fueled further by celebs like Rihanna, Kim Kardashian, David Beckham being seen with them.
Right, I saw pictures of that.
International sales now make up 39% of Pop Mart's revenue in 2024. That's up from just 4% in 2021.
Huge jump.
And the Monsters line, which includes Labubu, saw revenue growth of 726%.
700%.
And get this, a single specific Labubu figure sold for over 1 million renminbi at a Beijing auction.
$1 million for a toy.
Well, collectible art, perhaps. But yeah, it's not just selling toys, it's exporting this whole new aesthetic, a new form of collectible culture that's clearly resonating worldwide. Proof of China's growing influence in shaping global pop culture trends.
Okay, now for what seems like another layer, another twist in this complex story. We're seeing a surprising, but really significant trend. The rebound of Western, or let's say foreign, brands. Despite the rise of these incredibly strong domestic brands we've talked about, foreign brands are actually resurging in specific categories. It's not a simple replacement story.
Interesting. Where are we seeing that?
The outdoor sportswear category is a perfect example. That market has doubled in just 5 years. And now, 6 foreign brands are pulling in over $500 million each in annual revenues in China. Think Arc'teryx, Descente, the North Face.
Names in that space.
Right. And that $500 million mark. None of them had reached that back in 2019. So something's clearly shifted back in their favor in certain areas. It tells us something really important about the Chinese consumer today.
It absolutely does. It confirms it's not a zero-sum game.
Yeah.
Chinese consumers are highly sophisticated now. They know where domestic brands are leading, like the speed of innovation in EVs or the hyper-local appeal of a tea shop chain.
Right.
But they also recognize where international brands might still hold an edge. Maybe it's in high-performance technical materials, like for outdoor gear, or perhaps it's decades, even a century of brand heritage and trust.
So they value both, depending on the category.
Exactly. They're discerning enough to distinguish and appreciate both. And something else is emerging, which I think is really critical, a new M&A model.
Oh.
We're seeing Chinese private equity firms actively buying foreign companies, particularly in Europe and Southeast Asia. But crucially, it's not just to acquire them. It's specifically to leverage Chinese tech, supply chain know-how, and market understanding to scale those acquired brands back into China, and often globally, too.
So buying Western brands to supercharge them with Chinese methods?
Yeah. Kind of, yeah. It's strategic integration. It really challenges that traditional dynamic where China just manufactured for foreign brands. Now it's about actively reshaping global value chains, creating this truly intertwined future.
Okay, so let's try to pull this all together. What does this all mean for you listening? This deep dive, I think, has shown us that China's economy in the first half of 2025 is this fascinating study in, well, vibrant contradictions. You've got low headline confidence, but high strategic savings. You've got that caution, yet astonishing spending in high-value areas. You have domestic dominance in cutting-edge tech like EVs, but also the surprising resurgence of foreign brands in other categories. It's a market defined not by stagnation, but by really profound structural transformation, by incredibly discerning consumers, and by a new, much more multifaceted global engagement. So, implications. For multinational corporations, the old one-size-fits-all strategy, it's dead, unequivocally over. You need a deeply nuanced, category-specific approach. Focus relentlessly on real innovation, authentic value, and demonstrable quality. For investors, don't get swayed by simplistic, headline-driven narratives. Look deeper. There is significant long-term growth potential in companies that are leveraging tech, IP, and smart global expansion. And for policymakers globally, China's exports now are increasingly about innovation and soft power, not just manufacturing volume. That requires much more sophisticated, nuanced responses than perhaps in the past. And here's a final thought to leave you with. Consider this. If China's cultural exports, things like video games and collectible toys, can drive real-world tourism and fetch over 1 million renminbi at auction, what other unexpected arenas will Chinese innovation and consumer power transform next? And how might that fundamentally redefine our global landscape, not just economically, but culturally, in ways we probably can't even quite imagine today? Keep exploring, keep questioning, and keep thinking critically.